How to retire early with index funds. What to buy, how to buy, should I invest in a stocks and shares ISA or a SIP? These are some of the most common questions I get asked on YouTube and in my school community. So today on this live stream, I'm going to give you a simple 5-step plan so you can start investing in the stock market, and you know exactly how to pick index funds to get you ready for 2026. But first, I'm going to give you a personal story of why investing into assets is massively important. Well, it's two stories in one really, because I'm going to be telling you about me and my dad and how not being financially educated has meant we've struggled financially over the years for various reasons. Because we weren't taught about money from our parents growing up. We weren't taught about money or investing, things like compound interest, inflation, economics in general at school, which we all should be taught, obviously. So first, I'm going to tell you about me and then my dad. Now, if I'd have been taught, if I had any financial literacy leaving school, I know for a fact I would have invested from the age of 18 to now, so that's a full 24 years. In fact, I did start investing as an 18-year-old. I invested £500 a month into a stocks and shares ISA without any idea what I was doing. Unfortunately, after 6 months, I spent all of my savings on a lad's holiday to Ibiza. Huge mistake. Yes, we had a good time, but if I'd have kept on investing £500 a month every single month for 24 years, I would have ended up with £592,000. A huge amount of money for someone in their early 40s from investing £500 a month. And when you look at that figure, that huge figure, 450,000 is made up of interest earned. This demonstrates the importance, the power of compound interest. So that's a bit on me and how I didn't start investing as an 18-year-old. Thankfully, I finally got a grip when I was 35, when I took it upon myself to become financially educated. Now, unfortunately, my dad is 62 and he's struggling. He's struggling for various health reasons and he hasn't got much of a retirement pot. And he still has to work 6, maybe 7 days a week when he can, because he feels like he needs to build his retirement up. Now, it's bad enough that he hasn't got enough money, but it's worse because of them health conditions, like the fact that he needs 2 new knees. It's hard for me to watch. Now, looking back on my dad's working life, he's had really good jobs. And over the last 30 odd years, he could have easily saved, again, £500 a month. Now, let's make some assumptions. Let's assume he invested £500 a month, every month for 30 years in something like the S&P 500, and he got average returns of 10%, which is based on historical data, over 100 years of historical data. If he had the discipline, the knowledge, the financial education to invest for 30 years, he would have ended up with just over £1 million as a 62-year-old. A huge amount of money, and that would have meant he'd be happily retired now. Now, I see this time and time again with friends and family, contractors, and I'm sick of seeing it. I'm sick of seeing people struggling financially. It's because they're not financially educated and they don't invest into assets. Hopefully, after you've just listened to me tell you about me and my dad, you do invest into assets, or you at least start thinking about it. So moving on to the 5-step plan to invest in the stock market with index funds, so you know how to pick index funds. So what I'm going to do, I'm basically going to take you back to 2019 when I first started investing with index funds in a Vanguard platform. So the 5-step plan is: step 1, you learn about index funds. Step 2, how to buy index funds. Step 3, what to buy. Step 4, your retirement age, your retirement number. Step 5, how to retire early with index funds. Step 1, what are index funds? Well, in 2019, when I started reading the books on investing, I realized that index investing was right for me, because looking back on my history with money and investing, my up and down history, shall we say, I knew that I was an emotional investor and I wanted a way of investing that was stress-free. And that's exactly what index investing is. It's passive, it's set and forget, it's stress-free. You diversify, the costs are low, there are loads of benefits. But what are index funds? Well, if you invest into an index fund, you're basically tracking a market, an index, like the S&P 500 in the US or the FTSE 100 in the UK. So let's say you invest in the S&P 500, you're getting exposure to 500 of the top companies over in the US. And if one or two of them companies goes bust, tits up, it's not going to affect you too much because your risk's spread out. Not like me in 2011 when I lost our life savings gambling pretty much, chasing quick, easy money with individual stocks without any research, without any clue what I was doing. This is what happens time and time again. I've seen it in my 25 years as a contractor. Lads will hear about the next hot stock, steam in, put 10 grand in, 20 grand, even more, and a few months later, lose it all. I've known lads lose 50 grand, 60 grand, even more, and it's because of a lack of financial education. This isn't the case with index funds because your risk is spread out. By far, after 24 years of investing, my favourite way to invest. So that's a little bit on what index funds actually are. So what you do, you read the books, watch your YouTube videos, and if you want to know my top 5 books after reading hundreds of books over the last 6 years, type book below in the comments and I'll give you my top 5 books, like the little book of Common Sense Investing by John Bogle. That book is really good. It's simple, but it's really good. And that's what pushed me toward Vanguard. Step 2 is how to invest in index funds. So what you need to do, you need to pick a platform. Now, I'm just going to talk about what I've got experience with. So I've got experience with Vanguard, AJ Bell, Hargreaves and Lansdown, Trading 212. There are loads of platforms. All I would say, the main thing to think about when you first start investing is to keep them costs low. You sign up to a platform like Vanguard and then you pick a fund on the Vanguard platform and then you can start investing. Now, if you want to compare different platforms, have a look on Martin Lewis's excellent website, Money Saving Expert. One of his articles on there compares investing platforms. So type in Money Saving Expert, compare investing platforms, and it'll give you loads of information, like, again, comparing them costs. So if you want to start investing with index funds, you need a platform. But once you get on that platform, you need to decide whether you're going to invest in a stocks and shares ISA or a SIP. Again, one of the most common questions I get asked on here, YouTube, and on my school community. And by the way, on my school community, basically it's an investing community that's free for the rest of the month. Basically, I'm trying to give you one-to-one support with my experience. There's a weekly newsletter, a monthly group call. You're getting around hundreds of other investors. There's course material for you to complete, and you can ask me literally anything. If I know it, I'll try and I will tell you. I'll help you with all of my experience. So that's me plugging my school community and telling you a little bit on how to buy index funds. Again, if you've got 2 choices really. You can go with a GIA, General Investment Account, but I wouldn't recommend it. I'm not a financial advisor, and this isn't financial advice, but I would go with a stocks and shares ISA or a SIP because they're both tax-free wrappers. A stocks and shares ISA, you've got more flexibility because you can access your money pretty much any time, whereas SIP, you can only access your money at currently 55, but in a few years' time, it's going to be 57. So there's quite a few differences. I would say I prefer the stocks and shares ISA because of the flexibility, but there are more tax benefits if you invest inside a SIP. So step 3 is what to buy. What index fund to buy. So to keep it simple, you could go with the S&P 500. This is the most popular by far. This is what most people choose to go with. It's probably been the best performing index fund over the last 10, 15 years. You're getting really good returns. Historically, over the last 100, 150 years, you're looking at around 10% per annum. So that's if you want to keep things simple. But I prefer to be globally diversified. And there's loads and loads of index funds to choose from. All I would say is watch a couple of YouTube videos, start looking into different index funds, have a look on Vanguard, have a look on Hargreaves and Lansdown. You'll see loads of different index funds. Do a bit of research at the start. Once you start reading the books, you'll start getting a bit more confidence. Now, as I said on my last one-to-one call last Friday, what I've done in 2019, I narrowed it down to 10 index funds. And then what I've done, I started looking further into it, like past performance. So the fund that I eventually chose back in 2019 was the Vanguard Life Strategy 100 fund. 100 means it's 100% equity, 100% stocks. If you go with a life strategy 80, that would be 80% stocks, 20% bonds. So you might narrow it down to 10, 5, but it's just a good idea. Get a few that you fancy and then start looking further into it, like the past performance. So the life strategy 100% equity fund, asset allocation 100%, as I've said, ongoing charge 0.22%, which is low, quite low, but you can get lower. There's some funds that you're getting costs of like 0.07%. All I would say is keeping them costs low is important. You've got a risk of 5 out of 7, but the main thing I would say is to look at the price performance when you first start looking into it. The past performance over the last 5 years for the fund that I've invested into since 2019, for me, my wife, my daughters, is the following. So December 2020 to November 2021, 30.74%. The next year, -4%. The next year after that, 5%. 2023 to 2024, 22.94%. And over the last 12 months, 20.25%. This has averaged out about 12% over the last 5 years. Now, going back to 2021 to 2022, if you were to start investing in the Life Strategy 100 fund and you got returns of -4%, most investors would have panicked and sold. What you've got to do, you've got to keep educating yourself, try and calm yourself down and think long term. Zoom out and think long term, because you're not going to get 10% every year. It's going to be 30% one year, -5% the next, might be 10%, -5, 15. Hopefully you get the idea. Eventually it smooths out and you get them 10% returns, which is much, much better than keeping your money in cash or in a current account or a savings account. Like the 1.9 trillion pounds that's currently sat in UK current accounts and cash ISAs. We are just a fact that the UK is not a nation of investors. We are a nation of savers. And for me, that's got to change. So again, you can go with the SP 500 for some simplicity, but I do prefer to be globally diversified. All I would say is that once you start reading the books, watching the YouTube videos, you'll find an index fund that suits you, or index funds. Because you don't have to buy one, like what I've done. You can buy 2 or 3, 5, 10, whatever you want. So step 4 is finding your retirement age, your retirement number. Now, most people use the 4% rule. I like it because of its simplicity. So what you do, the 4% rule is basically you get a pot of money, you might be 60, 65, and you take 4% out each year and live off the interest. So let's use a nice, easy example. So what you've got to do, you've got to find your expenses. It's not an exact science, but have a look at your expenses now, what you spend in each year, and think about what would you need in retirement to live a comfortable life, a life that you and your family have become accustomed to. So you can go on holiday, weekends away, you can still enjoy your life. Let's say you need £40,000 a year. What you do, you times 40,000 by 25, and that gives you £1 million. So say you're 30, you know you need £1 million in your fund or funds to retire and live comfortably on 40,000 a year using the 4% rule. Because you'd have £1 million and you say you get 4% interest, you just live off the interest. Now, some people don't like the 4% rule. I like it again because of its simplicity. I like to keep things simple. And if you want more information on how to find retirement age and the 4% rule, you can have a look at some of my recent videos here on YouTube. Or you can type, what shall I say? Type yes below in the comments and I'll tell you what we'll do. Type 4% rule in the comments and I'll send you the link for one of my latest videos so you can fully understand how to work out your retirement age, how to use the 4% rule. So step 5, moving on to step 5, how to retire early with index funds. So basically, what I've done in 2019, I read about 50 books over a 6-month period, watched loads of YouTube videos, built up a level of confidence, and then I started investing with Vanguard in the Life Strategy. At first, it was a Life Strategy 80 fund, but about a year later, I changed to the Life Strategy 100 fund because personally, I don't like bonds. So you do the initial research, you decide how much you can invest each month, and basically pick a fund or funds and set and forget. So you might, as I keep saying, you might invest £500 a month, or you can afford to invest £500 a month, and you just set and forget. And you just check on your fund once or twice a year. To be honest, I don't even check once a year, once every couple of years. That's what, basically, unlike crypto or individual stocks, I've found that index investing is stress-free. You're not constantly checking on the price because you've done the initial research at the start, the initial work. So that's how you start investing. You do the research, you pick your fund, you invest a certain amount each month, and basically you forget about it. That's the simple part. The hard part is doing it long term. If you can do it for 20 years, 25 years, even 30 years, you retire early. Like I said at the start, using my dad as an example, if you can invest £500 every single month for 30 years, you will retire. If you're 30, you will retire as a 60-year-old with £1 million. Now, you might not need £1 million. You might be starting as a 40-year-old, 45-year-old. You might be able to invest more. This live stream and most of my content online is basically to help people to start investing, to build wealth and potentially retire early. I'm just trying to help people with my experience because I'm sick, literally sick of seeing people struggling financially, especially around the age of retirement. Hopefully this has helped. And if you need any more one-to-one support, again, you can join my school community. All you've got to do is look in the description, have a look in there, click the link. That's going to tell you all about my school community. All I'm trying to do is give you one-to-one support to help you get started. And then once you're in there, you get around other investors, hundreds of investors who are going to support you. It's a very active community. If you've got any questions, get them in there. Like, for example, should I invest in the stocks and shares ISA? Or what shall I invest into? You can even ask about individual stocks, crypto, whatever you want to ask in the comments, and me or other members of the community will answer your question. You can join the monthly call. You can get a one-to-one call with me. Because if you do go by yourself, obviously it's possible to do well, but it is lonely. And in my 24 years as an investor, I've found doing it by yourself is lonely, and you've got more of a chance of making mistakes. I've made far too many mistakes in my 24 years as an investor. Mistakes that I'm going to help you avoid if you watch videos on this channel, if you join my school community. One last thing before I stop. Everything I've been talking about today, basically how to pick an index fund and getting you ready for 2026, I've basically done a playlist all about this, which is 5-10 minute videos, index investing for beginners. All I would say is to take some notes so the information actually sinks in. That'll do for now. Hopefully you've enjoyed it. You've taken some value. Hopefully you do invest into assets, because you don't already know, the financial system is broken. Inflation is bad. Inflation isn't 3 or 4%. It's more like 10, 11%, even higher, because of inflation and currency debasement. If you understand inflation, you understand things like compound interest, you will invest into assets if you don't already invest. Anyway, thanks for watching.